Hey everybody, this is Cody Kessler coming to you with this week's episode of KLA Now. We're coming to you from the Rockville, Maryland office of Homebridge Financial Services and Kessler Lending Advisors. KLA Now is a show that is designed to bring you, the buyers, sellers, and real estate agents and other partners, inside information into the mortgage and real estate industry so that you can get some great tips and information that's designed to protect you. So this week's show, we are going to talk about something that's very near and dear to my heart, which is, oddly enough, veteran loans. A lot of people might not think that that's a real, sexy loan product or something to talk about, but I actually think that it's fantastic. Here's why. So I myself am a former United States Marine. So there's the first reason that obviously this is close to me. But sadly, a lot of people don't realize this, but the veteran community, active duty military, things like that, that community is actually targeted, and oftentimes it's taken advantage of. You see a lot of scams that go on that take advantage of veterans, especially elderly veterans. There's a lot of companies that really focus on veterans, active duty military, because they're trying to go after the refinance of them for the streamlines because of how much money those loans make. So it's really something where I believe that community needs somebody to champion them and then to really give them information that is, again, rather than designed so that they can make money off of that demographic, it's designed to protect them. So that's why I've tried to put this at the forefront and really focus on these products, is because I believe that there's not too many people out there beating that drum. So that's why I'm really excited to talk to everybody today about this topic on today's show. So you know what, let's go ahead and jump right in. We're going to start with just a basic overview of what is a VA loan. So a VA loan is a government loan. It is backed and guaranteed by the VA, the Veterans Administration. So what it is it's a loan product that is designed specifically for active duty military. It's guaranteed by the United States government, but it's just a traditional loan. These loans can be used to purchase or refinance a house. So it's from the basics and from that standpoint, that's what a VA loan is. It's pretty simple. Who can use a VA loan? Lots of people ask this question all the time. And this is actually where a lot of the myths come from. But most active duty military, even guys that are deployed, can use a military loan, or a VA loan. Veterans, obviously, and some veterans of obviously foreign wars that even weren't in the U.S. military. Actually, we can put a link up where you can actually go and check that eligibility. But reservists, people that are in the National Guard, spouses, and even spouses where somebody has died, as long as they haven't remarried. Now, I'll cover that in a few minutes here. But and then others, there are some other people, as I mentioned, that are not exactly in the U.S. military, but go to that link and check it out, and you'll be able to find out if you are eligible for a VA loan. Spouses. This is where we hear a lot. So, if you are an unmarried, and let's just say that you are active duty military, and unfortunately you are injured or even potentially killed in action, your spouse still has the ability to take advantage of that VA benefit and purchase a home. You can be missing in action. You can also be the surviving spouse if you are somebody that is disabled. And even if that disability has not caused death, they can still pass that benefit on, meaning that the vet might not be able to work for an income, okay? That the spouse can actually be the one providing the income. So spouses are a big reason that people can get in. And recently, if you are in a marriage that is considered non-traditional. So if you have a gay couple, you can actually, where it wasn't allowed before, you are now allowed, even though you are not technically married, you're allowed to be on that loan application. So that's great news for a lot of people there. How do we go over and just kind of cover topics of what the VA loan is? Well, first, I think that everybody knows, but if you don't, the most beneficial factor of a VA loan is that it's no money down. There are not too many loan products that do not require any down payment. So that's why it's so beneficial that if you are an active duty military or have the ability to take advantage of this, it's huge. because not too many people that are in the military have lots of savings. So the ability to get in with 0% down, it's a huge factor in getting these people into a home. And a lot of obviously first-time home buyers in the military. It does have to be your primary residence when you purchase. You can refinance in certain situations if it's not your primary residence, but those caveats and the things that would allow for that are pretty extensive. Credit. When you get a VA loan, the VA itself actually doesn't delineate that there is a minimum credit score. In fact, there's zero minimum credit score that's required for VA, okay? However, the lenders that you're dealing with actually will have a minimum credit score. A lot of them are at 620, some of them are at 6 or even 580 or below. But the point being is, it has nothing to do with the VA loan, it has everything to do with the lender that you're talking to. So make sure that you're finding out what the lender's credit score requirements before you might apply if you know that you're credit challenged. VA loans have expanded guidelines, just like all government loans. Higher debt to income ratio thresholds, there's a lot of extra things, and the idea behind the VA loan is they're going to do what's in the veteran's best interest. So they're really looking to make these loans for veterans, and they're trying to make sure that they are easier than other loans. So there are, like I said, expanded guidelines to make that happen. To get a VA loan, you have to have a valid certificate of eligibility. You can go, and we can put a link up to where you can go and get your certificate of eligibility to do that as well. But generally speaking, if you qualify, you've had a certain amount of time in service, you can go and get your certificate of eligibility, which is what's required in order to get a VA loan. As I mentioned, you can use these things for purchase or refinance, and if you do get a VA loan, they make it very easy for you to refinance that loan in the future by doing what's called a streamlined refinance. This is why there's so many scams out there, because they make it so easy for people to do so. There's no credit requirement. Basically, you just have to have a good mortgage history. So they're not even going to pull your credit score. And no income, no assets are required in order to refinance. Really, you're just signing loan documents and off you go. So it does make it very, very simple to refinance these things, and that's why they're called streamlines. So, if you do get approached, if you ever get into a VA loan, here's one thing that I can promise you. You will get bombarded by companies who have illegally, in a lot of situations, obtained your information and are marketing to you, okay? If you do want to do a streamline, make sure that you know the company that's reaching out to you, that you've vetted them out, and that you've checked them with the Better Business Bureau. But the best thing is if you feel good about the company that did your loan originally, you should always check with them first. Using a VA loan. There's a lot of people that think that you can just use it to buy a house, and that's just not the case. You can actually buy condominiums with VA loans. You got to make sure that the condo project is approved. Not all projects are approved by the VA. Again, it's very simple to check that. There's a website to go to, and we can put that up here again. But you can go and simply check, is that project approved? These approvals do expire, so keep that in mind. And we've seen several times where somebody has gone, put a contract on a house, they have gone, and we've gone and checked, and then all of a sudden, something will change. That will expire. And that's usually on the condo association if they have not reapproved that or reapplied within the specified time period. You can actually build or renovate a home. This is not, it's a great product that the VA offers. However, the VA product is not very prevalent because they do make it difficult for lenders to actually put that product out on the street. There are not many people that are willing to finance the construction piece. That's something that is actually a sad fact. So there are a few lenders in the country that will do these types of VA renovation or construction loans. You just want to make sure that before you go and get excited, that you're checking with the lender prior to going and getting a contract. Here's something cool that a lot of people don't know. You can get a second trust, okay, behind a first trust, and it can be a VA loan as well, to do EEMs, or energy efficient mortgage items. And basically what that does is you take that $6,000 and you can put in energy efficient appliances, windows, anything that actually makes that home more energy efficient. So it's a great little known thing that can really actually increase the value of the home. And then you also can finance things into the loan by getting a second trust. I think that you can also actually do it with manufactured homes. A lot of conventional loans won't even let you do that, but VA loans will, I do believe. So, a lot of people talk about the VA funding fee. And so to explain what the VA funding fee is, this is, if you've heard of a government loan, FHA, there's the mortgage insurance, or the FHA mortgage insurance that goes on that. There's two types of FHA mortgage insurance. You get an upfront mortgage insurance premium that's rolled into the loan, and then also there's the monthly mortgage insurance premium. With a VA loan, you have, instead of mortgage insurance, you have a VA funding fee. That funding fee goes to the VA, and it's actually the cost of them in order to guarantee that loan. That funding fee can actually be rolled into the loan amount, just like with an FHA loan, so that you're not paying additional cash out of pocket. They'll let you go up to 103.3% because that is actually the highest funding fee that's actually for subsequent use, meaning that you've used that funding fee more than one time, or used the VA benefit loan more than one time. But generally speaking, it's 2.25% for a first-time use for a primary residence, and it goes all the way down to 0 if you are disabled. So depending upon your disability rating, don't have to pay any funding fee at all. Not having a monthly premium on this is a big thing. So with a VA loan, you're going to pay that one-time upfront VA funding fee. There's no monthly payment on this. So it keeps that monthly payment down low. They also have extremely low interest rates, and I can kind of talk about that a little bit more later. But for a list of all of those things, we'll put up another link there, and you can go and check the full table of what those funding fees are so that you can see and know what to expect as you go forward. So VA loans, great product, absolutely fantastic, but it's one of the loans that actually has the most myths that go along with it. So there's a lot of misconceptions about VA loans. So we'll try to kind of clear up some of those right now. So the most prevalent myth is that you can only use the VA loan one time. I come across people all the time that say, hey, I've been saving my VA loan. I've been saving my VA loan so that we can take advantage of it. And I always kind of say, well, who told you that you could only use it one time? And again, it is just a simple myth that has been put across time. And as far as back when I was a Marine, I thought the same thing until I got into the mortgage industry and learned different. So with that, you can actually use the VA loan as many times as you need to, as long as you have restored your eligibility. Okay, so you buy a house, you use a VA loan, you pay that loan off, or you sell that house, and you know what? You can restore your eligibility, and off you go, and you can use the same thing again. The second one, I hear a lot of times, well, if I'm deployed, can I get a VA loan? Absolutely. You can get a loan, certainly if you're deployed and you have a spouse back at home. They can easily, obviously, occupy that property, and that's not an issue. But even if you yourself are deployed, you're not married, and you don't have a family member that is a eligible person that's going to be living in that home, such as a spouse, you don't have to occupy that property right away. VA, as a guideline, says that you need to occupy the property within 60 days. However, extenuating circumstances, if you're on deployment and they know that you're coming back 6 months later, they will actually allow you that extension. You just have to apply for it and let them know in writing and put that in the file, and they can make that happen. So they can go usually up to about 12 months. They really don't like to go beyond that, but again, VA is going to do what's best for the veteran. So if you're on deployment and that deployment gets extended for one reason or another, again, they're probably going to work with you to make that happen. So guys, don't think that just because you're deployed means that you can't get a VA loan. I can understand if you're on deployment and you're not wanting to go house shopping or the ability to do all these things while you're overseas, but again, the ability to do so is there. Can I use a VA loan to buy a short sale or a foreclosure? Absolutely. A lot of people think that that VA loans are only for regular resales. Not at all. If the property that you're buying is going through a short sale or foreclosure, you can surely use this loan to purchase it. So, I, as the buyer, can't use a VA loan if I have had a short sale. So, obviously there are situations, foreclosures and bankruptcies, where the VA is going to say you have to have that waiting period. But short sales aren't one of them. There are lots of lenders that will not allow you because it is discretionary based upon the lender that you're working with. But from a VA standpoint, there is no waiting period for a short sale. You have to document a few things to make sure, so it's always wise that if you are or have been going through a short sale, that to check with your lender prior to going and putting a contract on a house. Make sure that you're in the clear before you go and put yourself at risk. This is another really common one. So sellers don't want to accept VA loans because they think that they're difficult and that the VA appraiser is going to come in and tear the property apart, and there's going to be all kinds of fees and costs associated with the VA loan. That is just not true. The VA appraisers are going to go out there and they're going to look at the same exact criteria that any other appraiser is. It's really, is the house livable? Is it safe? There are some features that, in some situations that they're going to take a look at that might be small things, but it's not anything that the seller is required to pay for, okay? There is something, and that's for a pest inspection. The seller has to pay for a pest inspection. However, they're not responsible for remediation. That's up to negotiation, okay? But a pest inspection might be $50 to $150, and that's really the only thing that the seller is responsible for paying that would be different than any other loan, okay? Another good one is I can't simultaneously sell and then buy a new home. Well, guys, that's not true, okay? You can absolutely do that, but that's going to be up to, again, the lender that you're working with. Because when you, like I said earlier, you have to sell the property, pay that loan off, and have your eligibility restored at the VA before going and buying a new home. So it would be pretty difficult if you were working with a lender that says, hey, we won't let you close the loan until we've seen a brand new certificate of eligibility, because once you pay that loan off, generally speaking, the VA can take anywhere from 2 weeks. Actually, I've seen it less than that, but we'll say 2 weeks on, is a good expectation, to maybe a month and a half. So it's just depending on how quick the VA is. And if anybody's a veteran out there and you've dealt with the VA before, you probably know that they don't do everything quickly. So it's if you're working with a good lender, though, they'll know that that loan has been paid off in full by getting a copy of that closing disclosure, and they'll go ahead and send that off to the VA, and they'll let you close that loan simultaneously. So that is the last myth that I have for you that we can clear up. So let's just kind of do a quick side-by-side here. Just some basics of what the differences are between VA and a conventional loan. So first, VA, 0% down, as compared to a conventional loan, which requires as little as 3%. So in a lot of situations, if you're buying a smaller property, that's not a huge difference. But if you're buying a property that is $600,000, that's a good chunk of change. Again, additionally, note to this, VA loan limits. You can actually go, there's a website where you can go and check the county loan limits just like you can with any other loan. But with a VA, it doesn't mean that you can't borrow more than that, okay? So we've done $1 million VA loans before. It just simply means that you have to put some money down. It can't be 100% loan. Here's why. There has to have 25% guarantee by the VA. So it's just a simple loan calculation. Now mind you, it does not mean that you have to put 25% down. It just means that the guarantee has to be there. Now that's a pretty detailed conversation, and again, we'll put up another link here so that you can actually see all the different mathematical calculations that the VA says and how they could recalculate these things, because it's all out there for you to see. But again, you can do larger loan limits. You can buy a house for $1.5 million. It's just going to require a percentage down, okay? So we already talked about the upfront funding fee versus mortgage insurance, and you can kind of see what those two differences are there. There's an upfront with no monthly versus with a conventional. You're going to have either an upfront and a monthly, or you're going to have, if it's FHA, you're going to have both, or in a conventional world, you can just have the monthly. So there's lots of different ways, but that's what the VA has. And in conventional, not all options allow you to finance the upfront premium like the VA loan does. When you're looking at rates, this is a really big reason that the government gives this as a benefit, they're government rates. They are lower than conventional mortgage rates. And they aren't different based upon credit or loan to value. So even if you have less than perfect credit and you are putting down no money, you're going to actually get a better interest rate than somebody who's doing a conventional loan that has extremely high credit with a lot of money down, a large down payment. So there's a huge benefit from an interest rate standpoint with VA loans. As I mentioned earlier, so they're also easier to qualify. To give you an idea, most conventional loans give you a debt to income threshold of about 45%, meaning that your housing payment and all of your reporting liabilities can't be more than 45% of your gross monthly income. VA, generally speaking, you're going to end up about 57%, the same as a traditional government loan. However, depending upon the credit profile, I've seen them go much higher than that. So that means that they've got expanded criteria that really does make it much easier for a veteran to get a loan in today's market. Okay? So that is a great overview of VA loans. There's lots of tips, lots of ways that you can help yourself, but a VA loan is a great, great product. Don't wait. If you have the eligibility or think you have the eligibility and you're looking to buy a home, the first thing that you should do is research a good VA lender. Find somebody that's going to take care of you. Find somebody that's talking to you about the type of information that we just spoke about, because again, we put our clients first here. We're not really worried about making money, and I know that sounds odd, but that's actually why we've been so successful. Kessler Lending Advisors. Actually, the advisor piece is something that we take very seriously. We want to make sure that you get the best advice while protecting you and making sure that you are in control. So if anybody has any questions about VA loans, always feel free to reach out to us here at Kessler Lending Advisors. We are more than happy to answer your questions, help you get a VA loan, and make sure that you're getting all the information that is out there so that you can learn how to protect yourself. You can reach us here in the office. Some of the best ways to do so are right here on Facebook at Kessler Lending Advisors. You can also reach us in the office by calling us at 240-403-7233, or you can email us at KesslerLendingAdvisors@homebridge.com. Feel free to ask for me personally. I'd be more than happy to help you myself. That said, because VA loans and veterans and our United States military in this country are so important to me, and I love them so much, we work very closely with an organization called Platoon 22. Platoon 22 is a fantastic organization that is focused on ending the approximate 20 veteran suicides. It's now actually down from 22 to 20 suicides per day in the United States. So it is an unacceptable fact that our military members, both men and women, go overseas, they serve our great nation, and then they come back and they don't get the treatment that they deserve, and they end up with an option that is suicide. So this organization fights to end that through awareness, research, programs that are designed to help these people get to the other side, as they call it. So we would like to donate for every single VA loan that closes, and we will do that donation in the borrower's name. So we'll make that donation to Platoon 22 on behalf of the borrower to make sure that you understand that we care about you just as much. So work with us. Help us to end veteran suicide by getting a VA loan through KLA Homebridge, and we'll make a great donation to Platoon 22 in your honor. So that's what we have for you today. Hopefully you found this information on VA loans extremely helpful. But if you have some information, you can go right here and you can check out the information on how to get in touch if you want to know more about Platoon 22. You can go to info@platoon22.org. You can reach them at 866-991-4484, or you can find them on Facebook at We Will Win Platoon 22 or at platoon22.org. So thanks for watching this episode of KLA Now. We look forward to catching you next time on next week's episode. Thanks so much for watching.